Hello, everyone. You can tell how good the market is only by looking at the pre-market scan today. A lot of the semi stocks. I think probably the optics is gapping up because of the news. Uh, I think is Trump is banning the data center equipment from China. But you can see most of them are gapping up into the declining 50. So I don't actually see a very good opportunity for those stocks. AESHA is looking really nice here. One, but it's now is a little bit extended, so not gonna chase here. So yeah, not much not much interesting looking interesting today. And the market is gapping up. SPY is gapping up into the all-time high. So I'm not a fan of buying into the gap up. So probably I'm gonna wait. It looks like I'm the one who got locked out in this rally. HP is getting some follow through after yesterday uh pullback. Really like it. And CPR is like even closed above 50 EMA and the anchor free web yesterday. That's very amazing. And Dell is also showing huge strength during the recent pullback and the relative strength compared to the whole sector as well. And it has never fallen below um this candle low, which is yeah, and also the weekly 9 EMA as well. It looks so good on the weekly. So really want the market to slow down a bit and letting me to get some entry or on the pullbacks or just like at least not going straight up. And I hope like I've kind of set myself a goal on this on the coming uptrend is trying to wait for the best entry to come and avoid taking too many losses before uh like in between the good trades and trying to get the entry as optimal as possible this time and then I can like really fully maximize uh my buying power and also preserve my um mental capital as well. Circle is super strong today. Tomorrow, yeah, earnings tomorrow. Pre-market. Palantir also very strong action off the open. Now is at the anchor favor from the all-time high. Actually, this gap down, earnings gap down after the all-time high. Market is going up after the open, and I didn't not yet get the pullback that I wanted. And I think the two losses mm, could be avoided in a way. Uh, I think yeah, maybe MSTR could be avoided, like letting it to consolidate above the 5 minute EMA would be a bit better. But right now it's a waiting game. I'm not gonna buy the gap ups today. Probably really want the leaders to slow down a little bit. And Spy is just too strong. Too strong. Do you think this would likely be the April rally again? Does not even give any chance to catch on. Yeah, this is moving very fast. Um, it really feels like it, and I mean this is not the this is not the thing that that you should that you should worry about, or like you you cannot control the market. You cannot control how fast it go up or it goes down. I mean, I think probably like showing up every day is what we can do. Uh, and don't worry about that. Yeah, don't worry about the other stuffs. Like if there's an opportunity, um, just make sure you can grab it. Uh, and I'm sure there will be a lot. If the market really continues continues to push higher. Would you consider entering Lucid even though its earnings tonight? Price action looks beautiful. Uh, yeah, but I agree. I agree. It looks good. Yeah, but the main thing is the earnings is in tonight. Is in the after hours. Mm, I don't really like it, but if you can watch till the close, mm, and you end up with some profit cushions into the close, I think maybe. But it is a micro cap stock, so actually I don't know. I don't like holding a micro cap stocks into earnings with such a small cushion. A small cap stock, I think 3 billion should be small cap. And we got a lot of earnings um after hours, like tonight. So I think there will be a lot of EP opportunities in the coming days. How often do you hold into earnings? I took a DDoc entry last Wednesday and am at around 15R. And I am tempted to trim it all before Thursday earnings. Would really appreciate your advice. Um, yeah, I really don't like giving people advice for how to manage a trade, or like should I buy this or should I sell this? And I'm I'm a, I'm gonna put it this way, like I think you should try to at least keep some, like I understand why you don't like holding the position into the earnings. Um, but I would say the big money is um, made by sitting, like Livermore, the famous quote by Livermore, Jesse Livermore, and you got a decent cushion um, on the position, and right now the stock is in a, like it has just starting it, it has just breaking out from this flag, from this base, and the market is only like it's still within the range of the previous like consolidation. Like SPY definitely just breaking out. It's only like day 3 of this uptrend, and software sector IGV is doing very well. Like it's only the first week of this breakout of this breaking out from this range. Um, all the EMAs are really close to each other, and like it's it's only the early phase. Like it's not must, but I would say maybe very likely we are in the early phase of a software uptrend, software sector bull market. So I think the probability of D dot um, continues making new high would be would be higher, and I think it really takes time for you to decide um, what's the optimal approach, like which approach really fits your own personality. And I really encourage you to like to keep some, like just to don't trim all of it, and let's see what happens. And like for example, if you trim half this time, and then you can like try to look back after you have like closed your another half, maybe a few days later, maybe a few weeks later, maybe even a few months later. Like you can you can evaluate your decision uh, like after it. But yeah, but I think you have to experience, like you feel it, like maybe like selling too early, or maybe um selling too little, and then maybe get shaken out after a gap down. uh just a moment. Where where is your entry? Last Wednesday. So you got around like, yeah, 10% cushion. uh yeah, I think it really it really depends, and I think you should experiment uh, holding some a little bit. Like it, you will miss a lot of big runs if you just decide to like sell all of your position after before your earning. But selling like how much is really an art, and it really depends on you. And like detail, it could gap up 10%. It could also gap down 10%, or even gap down 20% after earnings. uh yeah, but also one thing I would like to remind you will be, um don't get panic if the stock is gapping down above your stop. Like you should, like, because DTOC is in a really strong uptrend above 10 and 21, rising 10 and 21, 9 and 21. But yeah, it could definitely like gap down 7, 8, 9, 10%, like into the rising 9, into the rising 21. I probably was still above your stop if like assuming a stop is at the low of day on Wednesday, or at the lower part of the Wednesday candle. So like trying to stick with your stop, even if like the DDoC is gapping down after earnings. I think that will be the, yeah, it will be the advice that I can give it. But how much should you trim before earnings? It really depends, and you have to test it out. No one knows um, what fits you the most. You have to find it out by yourself. Like in the beginning of my, like, I think back in 2024, I would trim maybe like 15% of, maybe when it's up like, I don't know, like 5 hour or like 10 hour, like when it's getting a little bit extended. Like for example, if I'm entering crowd, like for let's say like crowd on this trade, I'll probably trim some today when if I'm trading in 2024. But right now I don't, because I gradually like um learn how learn learn how to sit through the pullbacks better, and I don't know. I think it I'm okay with holding full position by trailing it with the EMAs, especially when the market is doing good and is in the early phase of a uptrend. So so it's a process of finding your own approach and your own style. For crowd, would you trim some after it crossed the trend line? I have no plans on trimming any positions. What do you think about BE entry on 20 SMA today? Um, yeah, I think it's a fair entry. Definitely a little bit extended from the rising 9 on the daily. Um, yeah, but the 60-minute pullback is very decent, and the risk is like the stop is very tight. Oh, not really, but I mean, if you can like really have a tight stop on this one, it will be fine. But if you have a like a stop wider than like 2%, then maybe it's not. In my opinion, it's not that worth it. And yeah, I don't quite like it's really close to the weekly 9 and also the daily 50 EMA as well. But yeah, but it's still a solid breakout in 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 certain sense, but yeah, but I would prefer wait for the rising 9 a little bit. But it's just my style, and I don't. I think it's I think it's fine. I won't say it's a poor entry or what. Yeah. Why you entered positions on 29th of July? Because I worried got a gap down due to the panic sell. Am I wrong for not buying? Um, I think you're definitely not wrong for not for not buying in on 29th of July. I mean, even um if you have tried buying something on that day, you probably got stopped out. I got stopped out on like a few times on the semi longs. Like only crowd survived when on Wednesday. But yeah, but Thursday the gap up, you maybe I think it would be a better timing, a better day for entries. It is gapping up above the 60-minute 9 EMA after the it's kind of extension to the downside. And if even if you missed Thursday, I think Friday would also be it will be an yeah, will be an okay entry. Also like to pull back into the 60-minute 9 EMA. So yep. And you're worrying about another gap down. Yeah, I got your point. And so I think it's uh yeah, the risk of getting another gap down on Wednesday, like after Wednesday, is definitely higher than now. Like then we're getting a gap down tomorrow. But I mean, there's always a risk of another gap down, and so don't get too obsessed with that. And but I agree, like buying buying it like into the weakness is definitely kind of difficult mentally. And if you tried, like if you try to maybe like try a few um like mean reversions or parabolic longs, and then you just feel really uncomfortable with it, then just don't do it. I think you don't have to trade like me, or like you don't really have to trade the mean reversions, the parabolics. You can just trade whatever fits you. So yeah, but I think um you should try it out first. Like, I mean, not you should, but you can try it out first and then see whether you really like it or not, or are you really good at doing that or not. And it seems the trend of HPE is weaker than SOCX with a long red candlestick. How would you interpret this? Would you consider it a pullback or a failure? I don't consider it a long red candlestick. Yeah, the range is like it's even smaller than yesterday. Okay, I think that's the first thing. The second thing is even with today's pullback or weakness, whatever you call it, it's still well above the anchor VWAP and the rising 9 and 21. So I think it's a really constructive pullback and I won't say it will be like a sign of strength, but this pullback is very healthy, very gentle, and it's pulling back into the previous highs too. Hopefully today we got I mean tomorrow we can get another gap down in the for the general market to like slow things down a little bit, and HPE would be a very good opportunity. But I mean, definitely, and you cannot just like um in, interpret or like analyze the strength of a stock purely based on a single day action. So Um, yeah, to me, HPE is just like on the on the weekly is serving the 9 EMA really well, making higher lows over the past month, while the Qs and the semi sector is going down. So, and then now the market is finding some strength. So the market is not showing weakness. Like the breadth is improving. The Russell is like going higher. Spice is at all-time high. Um, so in this case, I think HPE right now is a really solid um, pullback. But I agree, like when sometimes, let's say I don't know, um, I mean sometimes it really depends on the market as well. When we are in a like a weak market, I don't know, probably maybe yeah maybe somewhere like this, like the semi is like going sideways for very long time, and then trying to push higher, while the Qs is I mean probably IWM is not looking that good, like relative weakness. Uh, and then we see a reversal, a strong reversal after this push. If the same chart is showing like it, if HPE that this chart is trading back in the I think right here like the early 2025, and this I may not consider this like buying into the pullback. So let's just put it this way. So it really depends on the market context uh, also, and yeah, I think the same chart in two different market conditions and two different scenarios, it could end up differently. Like the yeah, I could treat them very differently. I love your way of trading. I consider you as the infinite R's master. I was up 100% this year, but decided to pivot to your style, and I'm only up 20%. Any advice? I just trade your style. I mean, you're trading much better when you're trading your style. Then why borders? Why why change in into my style? And you can definitely take a few things from me that works for you, but please do not copy any other traders. Like the rules, the style, the entries, the exits, the stock selection, the time frame, the chart settings, etc. Like you have to find your own. Like you just you make you learn some from them and then you test it out and it works. It's great. If it doesn't work, just forget about them and keep the ones who works for you. Would you mind explaining how you spot the strength in cyber 1 to 2 days early and not the other groups that took off later? I think cyber is showing strength for like 2 or 3 months already. They're always on my radar, but I just cannot get a good entry on them. And yeah, I tried. I forget where. I don't know. Probably tried trading Pan W off this breakout or this pullback. I don't know, but and then I exited like break even or like a small win. Like they are the leaders. They are the leaders in the past 2 months, and yeah, they pull back very gently with the market weakness, especially on the Qs. So yeah, I just bought them off the weekly 9 pullback, or you can say the daily 50 EMA. Um, why the weekly 9? Why the daily 50 EMA? I think one definitely the market, like the general indices contribute that as well. Like Qs is like undercutting reclaim of the 21 weekly. Spies barely pulls back into the 21. IWM at the like at 9 EMA weekly. Also the 50, like they're all on the daily or the weekly support on the or for the general indices, and the semis, which is the main driving force of this pullback, of this correction, is pulling back into the weekly 21. So I think entering near the weekly support level gives me good risk reward, and if the market did find support of the levels, the rising EMAs, then yeah, we could see some follow throughs like this. And the second reason is is from the study of the previous leaders. So SNDK never fall below the 9 EMA all the way up. Like it has found support for like almost 2 years on this weekly 9 EMA, on this 5,000% run. Hillcom, another one. I mentioned this as on my Twitter as well. For serving the 9 EMA all the way up back in 1999 for this like 3,000% move. So I mean, if you can trade in hindsight, where can you bet? Where can you get the tightest stop in order to maximize your risk reward? To me, it will be the pullback into the 9 EMA, and if it failed, like for the 9 EMA works pretty good in such a strong rally is when it failed, like close below like the 9 EMA. When the 9 EMA failed to show support, then it's probably the end of the uptrend, or at least it needs to go sideways for it needs to go for a pause. In a very high probability. Does that, I mean, it's like the past definitely cannot predict the future, and there are always some exceptions. There are always some nuance among different examples, but I found it pretty effective. And as for now, I don't know how the future would, like maybe 10 years later, the 9 EMA won't be that effective. Then just I think I just keep I'll keep following what the market does, and I right now it's doing fine. Have you checked out Simon Russell's blog post yet? Not yet, but I did have a glance, and it like I don't know, the website is very artistic. It's very smooth, and but I haven't started to read the content yet. If the market slowly grinds up instead of gapping up violently, would you be more inclined to short into resistance? Probably, but I I think the main the decisive factor would be the actions from the individual stocks as well as the breadth, and because like SPY and IWM has been demonstrating strength, while like this correction on Nasdaq is mainly because of the semi weakness. It's like the momentum crash because of this um, huge rally and the extensions of the leaders. And apart from that, like the defensive sectors are doing well, and we can see some like biotechs or the healthcare are doing well, and the software is catching up. It's actually catching up when the market is weak. So I don't see like it. I don't see uh, a favorable factors for like a for bear market or for a like a deeper correction when the market is the individual stocks are doing fine and the breadth is holding up. So I think I mean definitely the bounce would not be that strong, would not be that um, powerful when the breadth starts to decline. When the less stocks is showing strength, going up, making new highs, when the defensive sectors or other sectors start to crash down. So, but yeah, and yeah, but the chart itself is not the decisive factor, like the major factor that I'm considering, or maybe it will be more important for timing my entries or like finding the best intraday entries. But yeah, but the most important thing would be the breadth and the individual stocks. Because the indices are I mean it's the individual stocks who made up the index. So what's your conviction for hot today? It's gapping under all EMAs today. Is it because recent relative strength or and the sector strength? Yeah, I think yeah, I think you're right. Uh, Like individual stocks is showing relative strength to the market, strong bounce off the lows. Sector strength is also um, pretty strong. Uh, like the data centers are doing quite well on this bounce. And yeah, and it is gapping down into the anchor VWAP from the swing low. So yeah, I really like the undercut of the anchor VWAP, where when the and also the EMAs are converging. Um, so if I'm wrong, I think it's fine. But if it's starting to find support and climb uh climb above all the EMAs, then it will become a pretty decent chart and to set up for the upside. Uh, and also the market is very strong today. I think that this type of entry really depends on the market. It really depends on the context behind. And really strong actions on Palantir. That is just explosive. What can I say? Yeah, but the opening range highs it's pretty wide. Have to buy it on the first before the close of the first 1 minute candle. Uh, to me, like if you're setting a tight stop. So yeah, I think sometimes you would like the downside of setting of using a tight stop that you probably would not get a decent entry when you're getting like explosive move in the first few minutes of the day, and then it keeps going higher, getting follow through intraday. Then you're probably gonna miss that. This HPQ is also bouncing off the rising 9 pretty beautifully. Well, today's market is much stronger than I expected. That is very very amazing. I thought that it would face some resistance of this gap. Looks like it just clears it. It is not slowing down. Like going up with a full throttle. It's like a max power takeoff. Hmm. Yeah, AMD is setting up for the earnings tonight. Dow is so strong. I think the current market is like it's just moving very fast. I don't know. It, it's like after the sentiment have bottomed and the smart money starts just just keep buying it when the people when the public when the sentiment is still bearish when the people um is still not trusting the bounce is still worrying about the future about the news and after people realizing like the market turns bullish like they realizing it should be a time to buy like the market has been going up for like for a lot and we got so many V-shaped rally V-shaped recovery of the lows. I mean, although it did happen, also it did happen quite frequently back then. Like, but yeah, I think it also it is also quite common back then. Uh, but now it's just moving faster for the general market, the market as a whole. I think the Qs is like 1.6, 1.7 ADR right now. Back in, I don't know, 2014. Let's see. Maybe right here. It's like 0.7% ADR back then. Less than half of where we are getting now. So I'm gonna end the stream here today. And although the market is getting very hot right now, I think it definitely we will have a pullback, right? Uh, in the coming days, if not weeks. So don't get FOMO, don't don't chase, and I think you wait for the low risk entries. And we're getting a lot of earnings in the coming days. So I believe there will be a lot of opportunities coming soon. Right? So thank you guys for coming. And we'll see you in the next one.